You open your eyes at 4:53 a.m., not because of an alarm. Your body learned years ago that hesitation costs money. The room is dark except for 3 monitors mounted on the wall across from your bed. Bloomberg terminals. Green and red lines pulse in silence. $9 trillion in assets under management. The capital starts moving before the world wakes. Before ministers check their phones, you move it. Your coffee is cold. You don't remember making it. The mug sits on a glass desk that costs more than your first car. Floor 47, Manhattan. On the desk, a black folder. No markings, no logo. Inside, a list of 12 names. Only 3 people in the world know what it means. You are one of them. The list will be shorter by Thursday. Not resignations, removals. You didn't start here. 21 years ago, you counted coins at a supermarket checkout for $8 an hour. 17 years ago, you had $91,000 in student debt and a terminal that crashed every 4 hours. You worked in the basement of the same building. Same address, different floor, different life, different you. The market opens in 4 minutes. $6.2 billion will move in the first 22 minutes. You will move half of it. Not your money, never your money, but you decide where it goes. That is the product, not returns, not advice, direction. The terminal blinks. The machine is waiting. You were 24 when it first noticed you, but you didn't know what it saw in you or what it would take in return. Level 1. You are 24 years old. The salary feels enormous until you see what your managing director billed for a single phone call today. $18,000, 37 minutes, $500 per minute. His time is worth more than your annual rent. You are building a pitch deck at 3:47 a.m. The coffee is cold. The office is empty except for 3 other analysts. Nobody talks. This is the basement layer. The furnace room where the system generates heat. Your monitor shows an Excel file. 38 tabs. You are modeling the acquisition of a logistics company, revenue projections, cost assumptions, DCF analysis. Everything depends on whether the company can reduce headcount by 18% and maintain operational efficiency. The math is precise. The human cost is not modeled. You find an error in the formula at 4:37 a.m., cell G447, a misplaced decimal. If you do not catch it, the fund loses $8 million on the valuation. If you miss it, you are gone by Monday. No second chance. The machine does not forgive errors. It replaces the people who make them. One typo, 56 years of salary, 4 seconds. Your hand shakes, you fix it. The shake stops. Nobody calls tomorrow to say thank you. This is simply expected. But someone upstairs just put a check mark next to your name. You realize the error was not an accident. Someone planted it to see if you would find it. This is not a job. This is an audition. If you want to see what happens at the next level, subscribe. 3 weeks later, you discover what that checkmark meant. Level 2. By year 2, you are no longer building models. You are sitting across from pension fund trustees. The table is mahogany. The room smells like old money and leather. $430 million in assets. They are the trustees of the Colorado Teachers Retirement Fund. 4 million teachers depend on their decision. They are looking at you. They are waiting for certainty. You do not feel certainty. You feel the weight of the room. The trustee on the left is a woman named Margaret Chen, 63 years old. She worked as a teacher for 38 years before becoming a trustee. She has a pension herself, $15,000 a month. She is protecting other people's pensions. She asks, "What is the downside scenario?" You pull up slide 17, a table with 3 columns. Base case, bear case, worst case. The worst case shows a 3.2% annual return, below inflation, below their assumed rate. You explain the assumptions carefully. You make it sound possible, but unlikely. What you do not tell her, you deleted the 4th column before this meeting. The column was labeled catastrophic scenario. Probability, 14%. The file metadata still shows it. Deleted at 11:47 p.m. the night before. If anyone forensic checks your laptop, they will know. They signed the contract. $430 million. Your commission is 0.85%. $3.6 million moves to your firm. You receive $220,000 as your carry. Margaret Chen shakes your hand. "Thank you for your confidence in our stewardship," she says. Her hand is warm. Yours is cold. You notice she does not. 3 weeks later, you are staring at a spreadsheet. 812 names. The company you just bought with teachers' money. The word at the top, optimization. Level 3. One of the 800 is a man named David Ramirez, 42 years old. He has worked at Meridian for 19 years. He manages the distribution center in Memphis. He has a daughter in college, A wife with a chronic illness. Health insurance through his job costs $240 monthly. Without the job, Cobra coverage costs $984 monthly. You do not know David Ramirez. You will never know David Ramirez. The spreadsheet shows his position costs the company $218,000 annually, including benefits. Net savings if you eliminate his position, $75,000. The board approves the optimization on Friday. The announcement comes on Monday. Effective date, 18 months forward. 812 positions. Severance cost, $19 million upfront. Expected EBITDA improvement, $41 million annually. Net benefit over 3 years, $93 million. The math is perfect. The human cost is not included in the spreadsheet. You spend the next day building the presentation. 18 slides. Each slide is designed to make 800 job losses sound like strategic realignment. You use words like right sizing, operational leverage, labor cost optimization. The language functions as insulation. The pension trustees receive the EBITDA improvement guidance. Their returns just went up. Margaret Chen receives a letter. We are pleased to inform you that the acquired investment is exceeding initial performance projections. What she does not know, those returns are funded by people losing their jobs. You receive a promotion. Your salary increases by $180,000. You did not ask for a raise. The system simply moves money toward people who make things happen. But you cannot unsee the spreadsheet. You crossed a threshold. You are building the machine now. That night, you receive an email. Subject line, congratulations. No sender name. Just 3 words in the body, we are watching. Level 4. You are now 31 years old. You control trading systems that move $2.1 billion every day. Not manually, you design the rules, you write the parameters, the machines execute. Human emotion has been removed from the equation. The algorithm runs on a server farm in Virginia. 409 lines, 11 years of data, win rate 63.7%. Average holding period, 4.2 hours. Line 237 contains a condition you wrote 3 weeks ago. If volatility index exceeds threshold value, execute sell order at market price, no limit. In normal conditions, this is a safety mechanism, but during a flash crash, this becomes a catalyst. A feedback loop, you know this, you modeled it, you presented the risk to the CRO, Chief Risk Officer, a man named Thomas Kellerman. He asked one question. What is the probability of a flash crash event in a given year? You answered 0.03%. He approved the deployment. 3 months later, the algorithm executes 218 sell orders in 4 minutes. The market drops 1.7%. It recovers within 11 minutes. Your fund loses $41 million. The SEC opens an inquiry. You receive a subpoena. You provide the code. You provide the documentation. Everything is legal. Everything was disclosed. The inquiry closes. You sleep 4 hours that week, not from stress, from the realization that you almost broke a market, and no one stopped you. That is when you understood. They wanted to see if you would. 3 days later, you receive a key card. No letter. The card has no logo, no name. Just a magnetic stripe and a number. 68. You know what floor 68 means? Ministers, governors, the room with no minutes. Someone upstairs decided you passed the test. Level 5. The call comes at 6:18 a.m. Encrypted line. The caller ID shows nothing. You answer. The voice belongs to a deputy minister of finance from a European G7 nation. He does not introduce himself. He assumes you know. You do. He asks, if we announce the green bond program before the central bank meeting, what happens? You answer without hesitation. Spreads compress. Market interprets it as policy coordination. If you announce after, momentum dilutes. He says, thank you. The call ends. 211 seconds. You hang up. Your phone screen lights up. Reminder created. Follow up on EUR. Green bond timing discussion. Market impact estimated 11 to 15 basis points. Compression if announced pre-ECB. You did not create this reminder. Your phone was listening. It recorded the essence of the conversation. If the SEC ever demands your phone, this reminder proves you knew in advance. 3 days later, the announcement comes. 41 billion euros in green bonds, 2 days before the ECB meeting. Spreads compress 11 basis points within 4 hours. Your fund holds 2.4 billion in European sovereign green debt. The position generates 47 million in gains. You delete the reminder, but you realize if your phone recorded this, other phones recorded it too. In that room on floor 68, there were 11 people. 4 of them were officials you recognized. 7 were not. And one of those 7 just sent you a message. We need to talk about your device security. The message has no sender, no number, just 3 words. You screenshot it. The screenshot is black. Nothing saved. Deletion is confession. You are no longer reacting to markets. You are anticipating the anticipation, but someone is anticipating you. Level 6. You are now 34. You do not manage algorithms anymore. You manage the people who manage algorithms. Your title is Senior Portfolio Director. You oversee 4 strategies, combined AUM, $19 billion. You have 11 direct reports. That morning, you open an email sent at 2:14 a.m. from Sarah Okoro. Subject, Re-Q2 Performance Debrief Prep. Attachment, 112 pages. You open it. The last page is titled, Worst Case, Fund Closure. In it, she modeled what would happen if you shut down her fund. Conclusion, closure would trigger redemption cascade across 4 related strategies. Estimated AUM outflow, $7.2 billion. Reputational damage to firm. Potential client losses estimated $18 billion over 24 months. She was not defending the strategy. She was threatening you with math. You call her into your office at 10 a.m. She knows why. You ask one question. Do you believe the strategy is still valid? She pauses. This is the question that decides her career. She says, yes, the strategy is valid. The regime shifted. The model is now aligned. I expect positive alpha over the next 18 months. Your phone vibrates. SMS, unknown number. Device activity reviewed. Deletion at 0619 noted. Floor 68 meeting postponed. You pale. Sarah notices. Are you okay? You say, yes, your fund is approved. She smiles. Thank you for the trust. You nod. She does not know that someone is watching you. She thinks this is about her performance. It is not. It is about whether you can be controlled. You just proved you can. That night, you open your own HR file. Page 43. Succession planning. Internal candidates identified. Your name is not on the list. Sarah's is. And you ask yourself, if she already modeled surviving fund closure, what else did she model? Your termination? Your replacement? Level 7. You are 45 years old. You receive calls from ministers without scheduled appointments. No recording, no transcript. You receive a briefing document marked for internal distribution only, board level clearance required. You scan it with your phone before reading. The app recognizes a watermark and displays document ID BIS-2024-L IQ-framework-087-recipient, your name. Now you read. 12 pages. Section 4, subsection C. Projected impact of policy shift on emerging market USD bond spreads. Estimated movement 15 to 23 basis points within 48 hours of public statement. You know this document will reach 3 hedge funds within 6 hours. Not because you send it, because information moves. But if it leaks, they will know it leaked from your copy. This is not trust. This is a trap. The call comes at 6:18 a.m. Encrypted line. The voice belongs to a deputy governor from a Scandinavian central bank. He asks, if we adjust our collateral haircut framework on covered bonds, what would be the market response? You do not hesitate. If you tighten haircuts, bank funding costs rise. Mortgage rates increase. If you loosen haircuts, spreads compress. 3 weeks later, his central bank announces no change to the haircut framework. Spreads remain stable. The decision was not to move, but the decision was informed by your answer. The market did not move because you told him what movement would cost. You open your document archive. 41 files, you scan each one with your phone, 41 unique IDs, all tied to you, all traceable. You are not a trusted insider, you are a documented liability. You print one document, hold it to the light, the watermark is invisible, but the scanner sees it. You burn the printout. The scanner already logged the print job. There is no escape from documentation. And then you ask yourself, how many other documents with your ID are already out there? And who is tracking them? Level 8. You are 51 years old. You do not manage capital anymore. You design the architectures through which it moves. $72 billion from Garrett Whitmore's family office flows through structures in Delaware, Cayman Islands, Luxembourg. Effective tax rate drops from 38% to 4.2%. Over 3 years, the savings, $2.9 billion. Not evaded, optimized. Everything is legal. Everything is documented. Everything is invisible. You are paid $4 million for designing the structure. Your fee is a fraction of what they save. 2 months later, Garrett Whitmore's home state cuts public school funding by $93 million. Teacher layoffs, program cancellations. You read about it in a briefing memo. You open the legal memorandum from the attorneys, 147 pages. On page 41, a footnote note, state of redacted education funding shortfall, projected 87 to 95 million following implementation of revised corporate tax framework, effective fiscal year 2025. Structure remains compliant with all applicable statutes. The lawyers knew. They calculated the damage to schools in advance, and they wrote it in the document. Because knowing is not guilt. Guilt is acting against knowledge, and you acted within the law. You opened the folder labeled Confidential Client Structures Archive. 83 files, 83 clients, you open a random file. Footnote on page 39. Medicare funding gap estimated $340 million over 36 months post-implementation. You open another, same pattern. They all knew. You check the author metadata. Every file was reviewed by the same compliance officer. You search her name. She retired 4 years ago, moved to the Caymans. Net worth, $47 million. Compliance pays well when you know what to ignore. Somewhere in a glass tower in a city that never stops moving, a 24-year-old opens a terminal for the first time. His badge is new. It still has the faint chemical smell from the printer. His title reads, Analyst, Investment Strategy Division. He thinks $142,000 is wealth. He does not know that wealth is not money. Wealth is distance from consequence. His manager sends him a file, an Excel model, 38 tabs. Instructions. Review the DCF assumptions and check for errors. Need this clean by tomorrow morning. He opens the file. He does not know that someone 21 years ago sat in this same building, on a different floor, opening the same kind of file. He does not know that the person who opened that file now moves $9 trillion before the market opens. He thinks the system rewards hard work. He is not wrong, but he is not right either. The system does not reward effort. It rewards elimination of doubt. It rewards the ability to make 800 people lose their jobs and sleep the same night. It rewards the ability to design a structure that saves billions in taxes and feel nothing about the schools that lose funding. He does not know this yet, but he will learn. The machine teaches everyone eventually. The terminal blinks, the market opens. The young analyst begins his first day. 40 floors above, you open your eyes. The call is in 3 minutes. You do not think about the analyst. You think about the position in emerging market debt. The central bank announcement. The hedge. You have done everything correct, but there is always uncertainty. Not in the math, in the world. The machine does not stop. It just finds new compatible parts. And somewhere in the cold morning light, the system takes another breath. The numbers refresh. The machine takes another step forward. Because it was never about the money, it was about who would agree to forget that money is people.